Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, and Executive Director of Global Content, Emily Parker. Good morning. Hello from ETHDenver. You too?
Good morning.
Good morning.
Very excited to meet the ETH community out here. Let's take a quick look at the markets right now. The CoinDesk Bitcoin price XBX index currently at $42,338. Bitcoin is slightly down about almost 3% over the past 24 hours. The CoinDesk Ether price ETX index is at just above $3,000. ETH also sliding back about 2%. And the DFX CoinDesk DeFi index is at 298, below that 300 threshold right now. DeFi also trailing behind by about almost 3%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So yes, we're here. CoinDesk is here at ETHDenver, the largest and longest running gathering of the Ethereum community. Also, lots of news coming out this morning, Lawrence, we know that Canadian Prime Minister Justin Trudeau has invoked the Emergencies Act to block crypto wallets linked to protesting truckers. And in the United States, the U.S. Senate is proposing a bill to evaluate El Salvador's Bitcoin law and its threat to the U.S. dollar. So it seems like there is a trend of government encroachment and concern about Bitcoin.
It's not necessarily concern about Bitcoin, because what's happening with the Canadian truckers happened also with them trying to stop the GoFundMe campaign, or essentially putting pressure to end GoFundMe's fundraising for the truckers, or at least the reason why people went to crypto was because of this.
Yeah, but they are zeroing in on Bitcoin because of that.
They're zeroing, it's not just Bitcoin. There are other cryptos. There are a couple of, there was an ETH wallet here, and there was about 3 dozen wallets or so. They're narrowing it in. I mean, this is a bigger question about civil liberties in Canada. And as you know, if your last name is Trudeau, it's not necessarily a top priority sometimes. But
Emily, in other serious news, Snoop Dogg.
Yes, this is incredibly serious news. So there was a lot of attention about crypto ads at the Super Bowl, but there are also a lot of crypto investors during the halftime show. So yesterday we had the news that Snoop Dogg plans to turn Death Row Records into the first NFT music label. But it's not just Snoop Dogg, because Eminem also spent almost $500,000 on an NFT, and 50 Cent apparently was a Bitcoin millionaire, or at least at some point. So anyway, just wanted to make sure everybody knew about this.
Excellent. Let's check out the CoinDesk Spotlight.
Should have watched.
Yeah.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So I'm very excited to announce our next guest, because we have so much to talk about with stablecoin hearings appearing in Washington over and over again. And now, even more recent news, we have USDC stablecoin backer Circle doubling in value to $9 billion. And so there's nobody better to discuss this than Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle, and also former Vice Chair of DM, the artist formerly known as Libra. We'll get to that later. Anyway, welcome, Dante.
Thank you. Great to be back on.
So Dante, let's just get right to the elephant in the room, this $9 billion valuation. Apparently that's doubled since July. What's that about? What caused the valuation to skyrocket to that degree?
Well, I think for one, you could just see it in some ways. It's a tale of two sides of the story, two sides of the coin. On the one hand, we've seen just really impressive growth and increasing mainstream adoption of USDC as the most trusted dollar digital currency in circulation. Today, we stand at just above $52 billion in circulation. And USDC is really instrumental in powering a whole host of economic activity in a frictionless, high-trust manner in the US and around the world. And we think, that strong market position has really been one of the core drivers of strengthening Circle's position overall with the public market offering.
So Dante, you mentioned high trust. There are many in the market who want more disclosure out of Circle when it comes to what's on your balance sheet. They think that there needs to be more clarity as to what kind of liquidity Circle truly provides. why not do so? Why are we still getting this sense that Circle isn't fully disclosing the assets and it's just doing the bare minimum that's legally required, as opposed to what would make the investing public a little more comfortable with it?
Well, there are 2 points to answer that. First is, if you look at the statutory and legal requirements of how we are regulated, major payments companies who are in our ilk and in our class and have comparable regulatory footing today have no requirement from a legal or regulatory point of view to issue anything close to the type of transparency and accounting standards that we support for USDC in circulation. Since the first USDC was issued till today, we have been a standard setter on public trust and accountability, with attestations showing proof of reserves. And then, frankly, the other point I would make is that there is no better way than to be an American publicly listed company to continue building on that standard of public trust and transparency. So we think those 2 pieces coming together, along with continued engagement here in Washington, in the House, the Senate, and across the regulatory agencies represented in the President's Working Group, all of that to me is a testament of our company's commitment to trust, transparency, and effectively being a standard setter.
Yeah,
nonetheless, I mean, you do see this. I'm sorry, you do see in Washington, you are seeing a lot of pressure, a lot of questions about the safety of stablecoins. Part of it is, again, the lack of disclosure that's found on some of the biggest players, and Circle included. So will you further break down your assets, including commercial paper, any time between now and when you plan to go public?
Well, to be very clear, I think this to me is a topic that's settled news. The idea that first, not all stablecoins are created equal. I have a large paper to that effect that is a byproduct of my recent Senate hearing. The second is that as of today and for quite some time, Circle is strictly holding cash and short-dated U.S. Treasuries, effectively the 2 safest assets to back all USDC in circulation. And so I think it isn't really adding a lot of value to the conversation about how stablecoins are an important part of the global economic system that we're all talking about, to continue prioritizing the trust and transparency pillar. We think we've set a standard there, and we're continuing to work broadly with stakeholders on what that looks like. And then to the extent that that then becomes federal requirements, we're in the room, very, very deeply contributing to the conversation on national policies for these issues.
So no commercial paper is what you're saying on the
none at all,
sheet.
None at all. And the attestations say it. And frankly, the point of going public is to heighten the type of public trust, the type of public transparency on a company like ours, as a part of a broad revolution of what is taking place in sort of Web3. And if you think about all the things that you cannot do with your dollar in physical form, Circle and USDC are sort of answering that by importing those dollars and keeping the fundamental trust in the dollar, but importing them onto the internet. You may have seen our ads to that effect as well, about this is exactly how the U.S. can help drive the U.S. winning the digital currency space race.
Well, the latest round of stablecoin hearings that we're hearing in Washington, D.C., there appears to be a developing divide among lawmakers regarding their stance on stablecoins, with some questioning how they are backed, as Lawrence pointed out, and if they are potentially allowing fraudulent actions to occur. So are money laundering concerns with merit? And how, can they be addressed?
No financial system, however small it may be, is risk-free. And we as a business not only take, I think, great pains to ensure that illicit actors have no place to hide anywhere Circle is directly active. We're also collaborating with industry partners. Just yesterday, we announced, together with a number of major industry players, the Trust Network, which is a network on addressing travel rule compliance. And then before that, we joined a group known as the Crypto Market Integrity Council, which is led by Solidus Labs, that are looking at de-risking DeFi. And you're going to see a host of companion innovations that are really critical to ensuring that financial inclusion, innovation, and financial integrity are not seen as trade-offs. Things around other complex risks that may emerge here. So financial integrity bodies, FinCEN and others, Circle also responded to FinCEN's Bank Secrecy Act modernization consultation very recently. So we're working very deeply to ensure that access to these networks does not pose any risk to the global financial system.
So the Fed minutes that were released yesterday, one of the things that they said was that some participants, meaning on the Fed, saw emerging risks to financial stability associated with the rapid growth of crypto assets and decentralized finance platforms. Included a major factor in DeFi, of course, is the use of stablecoins, particularly algorithmic stablecoins. How much of a systemic threat do you find algorithmic stablecoins, including the ones that maybe use USDC in part to back them?
Well, so I have a very strong view, and just yesterday, the Financial Stability Board put out a 30-page paper looking at systemic risks to crypto assets, a now $2.6 trillion asset class, stablecoins and DeFi particularly. My only counterpoint to global bodies that are looking at systemic risk and stability risks is that there's also a risk in doing nothing, right? If you think about the fact that so much of our traditional brick and mortar banking system has in some ways reached a point of diminishing returns, the promise and the premise underpinning all of crypto assets is to have much more empowerment, a trusted form of always-on financial markets. These are not substitutes to any of the alternatives. They're just introducing much more optionality for consumers. I think therein lies the opportunity. And it, of course, behooves all of us, including companies like Circle and others, to lead by example, walk through the front door, and take a regulation-first posture on how these continue to evolve.
But specifically to the algorithmic stablecoin issue, I mean, is it just bluntly? I mean, is this a potential problem waiting to happen?
Well, it's sort of, again, a function of size. And what is the function of always-on dollars, whether they're algorithmic stablecoins or fully reserved-backed stablecoins like USDC or others? The function that DeFi is supporting, no business is risk-free, and DeFi, of course, is not risk-free either. But there are many advantages: price discovery, always-on markets, the ability to have sort of your capital work for you when it would otherwise be idle. These are incredibly promising alternatives. And I think the fact that alternative asset class can also be powered by algorithmic stablecoins should be embraced. What we have to describe, of course, for ourselves and for regulators are what steps are we taking to provide higher assurance around market conduct, higher assurance around market-facing disclosure. My risk, and the thing I'm most worried about, is that we're doing with enforcement what can otherwise be solved with disclosure. And I think DeFi offers great opportunities to continue growing the market, including with algorithmic stablecoins, but while at the same time harmonizing what type of risk disclosure is necessary.
Dante, I just want to switch topics for a second, addressing another elephant in the room, and that's the death of Diem. You for a while you were kind of the face of the project. Facebook created a stablecoin project called Libra, met with backlash by policymakers. It was renamed Diem. Then there were more dead ends, and now the project has effectively shut down and sold its assets off to Silvergate. So I just wanted to hear some of your closing thoughts on some of the lessons learned from the project's demise, and perhaps you could reflect on some of the missteps, perhaps, of Libra/Diem.
Well, it's a project that had many obituaries written even when it was in its very earliest days, but I think, candidly, without it, much of the global conversation around central bank digital currencies, around blockchain strategies, around population scale access to the global financial system, and the fundamental inequities that we have of the way the world and the way money moves today, owe great homage to the Libra project and to Diem. Personally, I would have done it all over again, and I think the role of modernizing global financial infrastructure and doing so in a compliant way, that project in many respects is a standard setter. But it also raises important questions domestically about the state of private sector competition, which actors can and cannot compete in financial services. And the notion of same risk, same rules, technology neutrality is a very powerful regulatory principle that is often cited. But what you find in many cases is that a technology is often being flagged, i.e. blockchain, as a technology that should not be broadly connected to the global financial system. I think those are points we have to continue pushing back against. And the Libra project was really one of the first to highlight those issues.
So Dante, just to follow up on that, I actually agree with that assessment that Libra, Diem, definitely sent a ripple effect throughout the world. So in that sense, it did accomplish something. The question is like, what was this ripple effect, right? For example, I know that you've been very critical of central bank digital currencies. China's, for example, China's central bank digital currency, China's basically said that Libra sort of lit a fire under them, and they were like, oh, we better catch up. We better do this as quickly as possible, right? So that was one tangible effect. Then that led to a ripple effect around the world, where you have now nearly 90 countries exploring central bank digital currencies because they want to catch up with China, right? So it's like everyone's like, oh, it's so great, Libra caused all these things to happen, but are they the things that you wanted to happen, right? And then also on the regulatory front, yes, Libra sparked a lot of conversation about regulation, but like not necessarily a positive one. I mean, I think the fact that Facebook was attached to this, and there's such wide distrust of Facebook due to the variety of data scandals, that Libra in some ways triggered distrust by regulators of stablecoins. So basically my question is like, could you argue that maybe Libra would have been better off left in the drafts folder, right? Like is this? I mean, really, did this actually really contribute to a positive thing?
History will tell, I suppose, to give you a more qualified answer on the question. But in a world in which the world was concerned about a digital currency being plugged into global messaging platforms that could reach billions of potential people, I think the point you raised about the ECNY WeChat Pay connectivity is real, right? And the alternatives to competition should not be, in my humble opinion, that the central banks of the world decide to digitize their thrift, effectively picking winners and losers in the movement of money and potentially eroding confidence in the two-tiered banking system. The alternative is exactly the business model that Circle is proposing, and in our view, the very business model underpinning USDC, which is that you keep the air gap between the central bank, your wallet, and how you spend your money, including in digital form. And then you promote vigorous competition in the free market for how money moves in the 21st century. So we think we're a very deep part of that economic competitiveness story. You may have seen some of the ads we took out in the Financial Times and elsewhere describing how the US could win the digital currency space race. And then most recently, we also partnered with the American Security Project and a group of 40 nonpartisan national security leaders in calling for U.S. leadership on Web3 and U.S. leadership on blockchain and digital currencies as a way to keep pace effectively and win the stakes of this global competition.
I just want to go back quickly to Libra/Diem for one moment, because this was such a big project. It was such an ambitious project. It took up so much bandwidth, so much airtime, so much capital, right? And now the narrative on it is kind of like, okay, we gave it our best shot, but like the regulators shot us down, right? And I just want to there must have been something that Libra/Diem could have done differently, right? I mean, where's the accountability on the part of the project? Like, what could they have done differently potentially to get a different result? Or is this really just like they just did the absolute 100% job and then regulators just wouldn't let it happen?
Well, first, I would encourage you to ask Libra people who stayed slightly longer than I, who could comment on what could have been done differently. I may have to write a book at some point about the experience and the movement of money in the 21st century. But I do think, again, the view of being able to have hearings and a public discourse of where the bright red line is between public interest and private sector innovation with blockchains and crypto assets very broadly is a topic that continues to garner a lot of attention. What we're seeing today in Washington, in a world in which Libra and other projects have maybe scaled down their ambition, is, I think, a little bit more receptivity amongst policymakers and regulators, but nonetheless, the core questions of, can we in fact have financial regulations that are technology neutral and that are not singling out blockchain and crypto assets as excessively risky? I think that discussion is still ongoing. The FSB are still producing papers calling all of crypto assets excessively risky. The President's Working Group on Financial Markets are calling all of this space excessively risky. Frankly, I think we and your publications and your platforms need to do a slightly better job of describing where are there risks in doing nothing and where have the global financial systems effectively failed if status quo is all we have left. And so we're very busy, preoccupied with the risks of this novel sector, but we have to also describe the alternatives in which you and I cannot move money at scale, but for stable coins, open digital wallets, and an open competitive ecosystem that helps power that.
Okay, but look, there's a difference between what USDC does and Tether does, for instance, and what Facebook does. And that is, Facebook collects an enormous amount of consumer data. It collects an enormous amount of social data, political data, data about people's connections to each other and how they think, and the algorithms are fantastically provocative and also have figured out exactly what pushes people's buttons. Is the fact that Facebook itself decided to put its name on this project the reason why it had to fail?
I would encourage you to ask Facebook that question. I left the Libra project
but you were
in April.
But as somebody who was on the project,
mm-hmm.
I mean, you must have heard some feedback. Hey, we don't, were they like, oh, great, Facebook is behind this, we should go for it? Or was it, oh God, Facebook is behind this, this is not going to be a good thing? Which one was it?
Well, it was a blend of both, and I think all of it is incredibly well chronicled in the public record about what the world's reactions were. There were a number of hearings all over the world on these topics. I think that part of the story is told. The question remains in my mind a question of, but for large-scale, principled, well-regulated competition on how money moves, there will be a lot of people left on the margins of the global financial system. And so in my view of the world, that was my own motivation for joining, despite some of the complexities that you've pointed out and some of the trust deficit that you pointed out. Until now, I remain unconvinced that unless you have principled, responsible regulation on how money moves, something that I think Circle is deeply contributing to, we'll have billions of people who will remain on the margins of the global financial system. I think that's a journey that's worth pursuing. And it shouldn't come at the expense of people's privacies, nor at the expense of the regulatory system and financial crime compliance. I think that's part of what we all have to demonstrate in the crypto assets market, is that inclusion and compliance are not trade-offs, but that you could have both.
So if I'm to read between the lines here, you're saying that, yeah, maybe Facebook was a problem.
No, it's a part of a process in which the association that was stood up had governance independent of any single member, and went to great lengths to establish that. That was where I sat. That's why I can't particularly comment on Facebook. It was one member among the many that were in that organization. I think that piece will be told, I think, over time about how earnest those bright lines were in establishing governance and checks and balances in that project. And frankly, the regulators made that very clear as well.
All right. Just rounding out our conversation, Dante, the timeline for going public, do you have one?
Well, it's a lot of that excitement that we've just conveyed early this morning is still, of course, a paradigm of move as quickly as we can. But of course, the actual end date of going public is not entirely in our hands. It's a part of a review process that we're working on as we speak. But we're excited about the new deal that was announced this morning.
All right. Well, congratulations on the 9 times unicorn status. And you continue to be an exceptional advocate for the crypto space. So thank you very much, Dante, for coming on the show, sharing your analysis.
Thank you. Great being on.
Right, that was Circle Chief Strategy Officer and Head of Global Policy, Dante Disparte. All right, coming up, Crypto Markets Update with trading educator, TheoTrade. What's next?
Hey there, it's Zach Seward, co-host of The Hash and Deputy Global News Editor at CoinDesk. You're watching CoinDesk TV.
Time for our live look at Bitcoin. The CoinDesk Bitcoin price XPX index currently at $42,144. Bitcoin sliding about 3.4% over the past 24 hours. The CoinDesk Ether price ETX index is just below $3,000 right now, also pulling back about 2%. And the DFX CoinDesk DeFi index at 297 DeFi, having a couple of losses at 1.5% over the past 24 hours.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Bitcoin's been slammed over the past couple of hours, and joining us now to discuss the markets is Don Kaufman. He's co-founder of trading educator TheoTrade. Welcome, Don.
Thanks for having me on.
Thank you. So why do you think crypto's taking it on the chin today?
Well, really, all asset classes are, for the most part, across the board. Really feels heavy, though, specifically this morning. Everything from the S&P futures, they're down. Volatility indices are actually skyrocketing today, much more so than we've seen in a lot of recent trade. And actually, I look at the bond market as well. The bond market is rallying right now, which absolutely feels like a little bit of duck and cover. And again, Bitcoin is trading just like any other asset class, just with a lot more volatility.
How long do you see this lasting? Any catalysts or tailwinds that could get us out of this, or perhaps take us down a leg lower?
Yeah. So as I've been on here, week in and week out, I've been absolutely bearish inside of Bitcoin. I hate to be the consummate bear, week in and week out. Nevertheless, there's a lot of headwinds to markets right now, both crypto markets and, of course, as I said, all asset classes. And it has a lot to do, obviously, with the Fed and inflationary pressures. But one of the aspects we're very likely to see in coming weeks, and this is prior to even another FOMC meeting, is that I believe inflation is going to absolutely explode, as this is kind of a last gasp, if you will, for different assets in the marketplace, ultimately driving even higher inflation. Everything from housing markets to high ticket items prior to the increase, of course, of interest rates. Those impacts and that inflationary, kind of overview is going to have negative implications really to all asset classes across the board. And, specifically for me, listen, I'm a volatility trader. So we can't ask for more than this kind of price action. Seeing Bitcoin down today, I know that, there's a sinking feeling in the stomach of a lot of traders, but ultimately we're going to have to go through this and come out the other side before, things ultimately settle down.
So Don, is there a strategy to navigate through this volatility?
Yeah, so, it depends, again, on levels of experience in this marketplace. The strategy that I am actually using is I'll actually trade, crypto itself against some of the futures contracts, against even some of the new listed, if you will, like ETF options. And again, I'm actually kind of triangulating different positions in there. One of the limitations that some people will face is it's difficult in a time of volatility. This isn't exactly a buy and hold type marketplace. So your timing is going to have to be incredibly effective. At this point in time, as again, horrific as this is about to sound, but at this point in time, I don't want to go long, crypto until you actually see, Bitcoin specifically down into the lower 30,000 handle. And at that point, I'm even going to tell you, you're going to have to kind of reassess. I mean, this marketplace has gotten ahead of itself. Regulators, they're coming right now. I mean, I know just previous to me, you had obviously a discussion about regulation, but that's coming. Unequivocally, you're going to see a tremendous amount of, regulatory activity. And a lot of it stems from, well, you just saw, millions and millions of dollars being spent on Super Bowl commercials is going to bode well long term for some of the crypto asset classes, but in the very near term is going to provide some regulatory headwinds.
Do you think that implied volatilities right now are kind of on the low side, or do you think they'll start to pick up? And in general, I mean, if your view is that you're ultimately going to have higher inflation down the road, don't you think that would spell a bull case for the likes of hard assets and digital assets such as Bitcoin?
Yeah, first, implied volatility specific to some of the coins is likely to pick up again. So it did quiet down. It looks like it formed a little bit of a base, but you're going to see a pickup specifically inside of Bitcoin. We should be rocking back up to like a 90% implied volatility. Now, in terms of bullish or bearish case because of inflation, I've heard this for literally decades. I've been in the markets for quite some time, and that is equity and indice markets. And I always came from the index world. And one of the things I heard time and again early in my career is that gold is a great inflationary hedge. And then, of course, I went through the financial crisis. You know what everybody did? They whacked gold. They sold gold ultimately to finance carrying other positions. And you have to look at Bitcoin at this point as any other asset class, right? So if you're trading Apple and you're going to take a hit inside of Apple, what are you going to do? Probably have to finance some of that hit, some of that margin call possibly with selling out of the crypto. I just don't think we can look at this as, yes, it's a separate asset class, but it's now in heavy correlation with ultimately indices, volatility in the broader market and even bonds.
Don, just quickly, the narrative over the past week or so has been that Bitcoin and the crypto markets has been tracking geopolitical tensions, specifically with Russia and Ukraine. I'm just wondering if you buy into that narrative. Do you think that's actually what's happening? Because that's definitely been the headlines, right? It's like, okay, people are nervous that Russia's going to invade. Okay, Bitcoin goes down. Okay, Russia seems to draw down. Bitcoin goes up. Do you buy into that, or do you think that's just
absolutely, absolutely, unequivocally yes. Absolutely. There's no question that Bitcoin is seeing some price action based on the geopolitical risk. However, here is the one area that I can tell you right now that would be kind of a bull case for some of the coins in the near term, because ultimately, if sanctions hit Russia and hit Russia heavily, okay, there is no question that they're going to go into every stable coin. They're going to go into Bitcoin. I mean, this is how they're going to circumnavigate it, which is, once again, it brings us back to, of course, U.S. regulatory bodies and really throughout the entire world. They're going to be talking about this for decades. The regulatory constraints, can they be put on? Can sanctions even work in a marketplace that's completely decentralized?
All right, Don. Great analysis. Thank you for your time. That was Don Kaufman, co-founder of trading educator TheoTrade. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick. So earlier on in the show, I talked about Canadian Prime Minister Justin Trudeau, and he's evoking the Emergencies Act to block crypto wallets linked to protesting truckers. Any update on that?
Good morning. Yesterday we FinTrack, that is Canada's one of Canada's international money laundering agencies, put 34 different crypto addresses, including 29 Bitcoin addresses, onto a sanctions list, basically ordering financial institutions not to interact with these addresses and, seemingly trying to freeze these funds that have been donated to Canadian truckers, which under the Emergencies Act appears to, kind of designate these truckers as, don't quote me, but I think, involved in not just illicit activity, but possibly terroristic activity, which has set a lot of folks on Twitter, aflame.
And at the same time, the U.S. Senate is considering a bill that could possibly look into El Salvador's Bitcoin law. And I wonder, could you clarify, because there seems to be some confusion, or at least the way how the media is telling it and what the bill actually says.
Yeah, so this was an interesting bill by the Senate Foreign Relations Committee, and the bill itself is actually really interesting, I think. It's basically calling on the Treasury Department to conduct a study into El Salvador's Bitcoin law, and it wants the Treasury Department to look at not just the law itself and how it was created, but also how it's being implemented, how it's being used. And so it's asking questions like, what is the internet penetration in El Salvador? What is the percentage of the population that's able to actually take advantage of this? So it's not just saying, okay, well, Bitcoin's bad and El Salvador is whatever. It's saying, here's some actual questions that people have been asking since the El Salvador Bitcoin bill was first introduced back in 2021, and it's still in committee. I have no idea. I haven't heard anything yet about how it's going to proceed, but the fact that it does seem to be focusing on these questions rather than just the the question of, can Bitcoin undermine the U.S. dollar, which is of course another question that is being asked. it strikes me as, it's so a combination of, perfectly fair and valid questions, and ones that I think even we at CoinDesk have been trying to get answers to for the last year.
All right, Nick. Thanks for the update. We'll keep asking those questions. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Now, time for our tweet of the day as we look at crypto Twitter, and this one from El Salvador President Nayib Bukele, who is reacting to that law being discussed in U.S. Senate on El Salvador's Bitcoin law. Okay, boomers, you have zero jurisdiction on a sovereign and independent nation. You're not your colony, your backyard, or your front yard. Stay out of our internal affairs. Don't try to control something you can't control.
We've invaded for a lot less.
Christine, before we go, you're now at ETHDenver. What's the vibe there? What's it like?
This is the largest, longest running gathering of the Ethereum community. There's just a lot of excitement. What I find really interesting is that there are a lot of newcomers to this space. So a lot of them, are just trying to understand what Web3 is, what Ethereum is, the differences between the blockchains. So I like that new energy and just that discovery audience. And that's what we at CoinDesk try to talk to all the time, trying them to understand and use this technology and innovation. So just a lot of excitement. I also had a chance to check out the Shapeshift party last night during a snowstorm, which was pretty epic. We had to go through a 2-hour bus ride in the snow up an avalanche of a mountain, and we ended up in a private, undisclosed location, which is very DAO-esque, and thankfully I arrived home safely. Very shapeful.
Were you paying extra? Are you paying extra in transaction fees compared to anything else you've done to keep in line with ETH?
I've been given free tokens, so we'll watch those transaction fees. I try to avoid. All right. Thank you, Lawrence. Thank you, Emily. I'm your host, Christine Lee. That's it for First Mover. Meantime, check out The Hash at noon Eastern, as well as All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also, check me out here. I'm at the Denver Sports Castle. So definitely, indeed, if you're in Denver for ETHDenver, say hello to CoinDesk. Next up, stay tuned for the daily forecast to see what's happening in the Asian crypto markets.
Is Hong Kong the ideal testbed for China's plans to make the digital yuan global? Welcome to the Daily Forecast, February 17th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, Hong Kong has long been known as an international financial hub, and now it's set to pilot retail cross-border use of the eCNY. We're going to take a look at why experts believe the city is an apt choice for testing international payments using the digital currency, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with some of the biggest stories coming out of Asia today. First up, more crypto and sports bedfellows to tell you about. Singapore-based exchange Bybit is sponsoring Oracle Red Bull's Formula One racing team. Oracle Red Bull claims it is the largest annual crypto sports sponsorship to date. While the scale of the deal has not been officially disclosed, an unnamed source has been cited in media saying the sponsorship is worth $150 million over 3 years. Bybit is going to work on growing fan engagement by issuing fan tokens. According to data from CryptoSlam, that could be a good choice as all-time sales volume for the fan token market as a whole is approaching $50 billion. Meanwhile, 2 unicorn sightings in South Korea to tell you about. 2 South Korean crypto exchanges have achieved the billion-dollar valuation status. According to the Ministry of SMEs and Startups, Upbit and BitThumb were among the 7 Korean companies that achieved that status in 2021. Now, crypto is hugely popular in the country, with a survey last November finding that 40% of South Koreans in their 20s and 30s have already invested in digital assets. And while a planned tax on income from digital assets is now delayed to next year, crypto-related campaign policies are expected to play a key role in convincing younger voters to take part in next month's South Korean presidential election. You can find those stories and more at forecast.news. Now, over in Hong Kong, the city is set to become a testing ground for Chinese authorities to pilot cross-border payments using the digital yuan. And experts say the international city is an ideal choice. But why? Forecast News' Timmy Shen reports.
Hong Kong's position as a bridge to the world is well established, with the city already a primary offshore yuan trading center. According to the de facto central bank, the Hong Kong Monetary Authority, over 70% of offshore yuan settlements are made in the city. And given its economic and political nuances, one expert told Forecast Hong Kong is the obvious choice to pilot cross-border payments with the digital yuan.
Hong Kong's role in this is that of being a perfect laboratory experiment, because it is both part of China and it is at the same time a part of China with a separate currency. So you can control and not control. You can see what happens. But nothing is going to happen in Hong Kong which would destabilize China about ECNY.
Deployment of the ECNY will not only improve payment efficiency and reduce costs, it will also allow Beijing to monitor and manage capital outflows more easily.
What China doesn't want to do is to see large capital outflows destabilizing the renminbi, whether it's the ECNY or the CNY. They don't want currency volatility.
Initially limited to the Greater Bay Area, encompassing Hong Kong, Macau, and Guangdong Province, Roach says the trial is a precursor to wider implementation of the digital yuan.
This will then open the way to using it in a broader international context. So Middle East, African, Asian currencies, any currency, basically.
For Forecast, I'm Timmy Shan.
For the past 3 decades, if you were at the Olympics, you only had 2 choices. If you wanted to buy a t-shirt, a souvenir, you either had to pay by cash or a Visa card. And then the 2022 Winter Olympics began, and China changed things up and introduced the ECNY as a third alternative. Now, with the Games nearing a close, how successful was the move introducing the ECNY to the world? And a lot to talk about this week. In the hot seat, Michael Wu, CEO and founder of Amber Group, is here to talk about all the latest developments in the new economy. Great to see you again, Michael.
Thank you, Angie. Great to see you.
All right, okay, so have you been watching the Olympics, Michael?
Not too much. I've been following on social media, but it's been too busy.
I think that's been the case for the Olympics, but it has been a very interesting Olympics so far. Beyond sports, a lot of netizens have been keeping a close watch, not only on the games, but actually the push for ECNY. What's the read as you see it so far?
I think digital payments is definitely the trend globally. There are different forms of it. I think crypto, as we know it, is a major form that's up and coming. The other types of digital currencies, such as CBDCs like ECNY, is also being rolled out. I think it's a great thing. It definitely brings a lot of convenience for the end consumer. Different types of digital currency will have different features. Some are more decentralized versus the others. But all in all, I think that's just the inevitable trend as everything moves to the digital world or digital era.
Well, you know who else is jumping on that bandwagon? And I never thought that this was going to happen. The Oracle of Omaha, Warren Buffett himself, making a second investment into Nubank. This is, of course, one of those crypto-friendly banks, challenger banks that are in this space, and he's dumping Visa and MasterCard, and he's going into the challenger bank business. Now, it's a very crypto-friendly bank. How do you read this move? Increasing his investment stake in potentially a crypto-friendly bank.
I think a lot of the trends are just inevitable, such as fintech, overtaking traditional finance, and new kinds of neo-banking or digital financial services being proven more superior, more effective than legacy banking. In the case of this investment, I think it's a good investment. A new bank is also one of the largest new banks in Latin America, which is a very important booming economy that we are also looking very closely at. It has a hugely digital native young population. A lot of them don't actually have legacy banking account, but they have internet access. So instead of having their first bank account, now they have their new bank account.
Well, you know what? To your point, it is the new economy driven by the new generation, and they're looking at all of these onboarding vehicles that allow them for wealth generation, and of course, the grandfather of them all. Let's talk about finally the latest on Bitcoin. Hash rate had a huge jump to a new all-time high this week, even as Uber CEO said they would accept Bitcoin as payment when it becomes environmentally friendly. So that's a really interesting move in the right direction. But what is the energy consumption barrier and issue? Could that still be an obstacle to the use case adoption?
Carbon neutrality, the sustainability is a very, very important topic that I think the whole world cares a lot about. And Bitcoin's proof of work model, where essentially you convert energy consumption into that value storage to back the value behind Bitcoin alongside its scarcity and everything. I think it's a very universal model where money comes from a storage of energy value, right? Which if you think about it, is quite fair and probably more robust than any fiat-based system. On the other hand, I do think we need to pay attention to the sustainability investing side of things. Platforms such as Wealthing, where we're going to roll out green Bitcoins, green yields, where the investors can not only invest in Bitcoin and other digital assets, they can naturally easily offset their carbon impact with a single click.
And it really incorporates that kind of social aspect that a lot of, increasingly, this generation and the rest, when it comes to investing, cares about in the new economy. Michael, always good to talk to you. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.